In this video, I will be explaining why I think that NIO has actually good chances in an economic downturn or even a recession. And well, of course, we know that we are possibly going into something like a global recession. That's because the Fed is raising their interest rates, and that will have various effects on economic output. And so the criticism to NIO is that in the current stage, they are not making profits. So this means possibly, well, NIO has to go into using up some of their resources, mainly their cash resources that they're having. And so there are possibly people out there who are worried about this situation and what this would mean for NIO. And NIO has oftentimes been criticized for the fact that they are infrastructure heavy and also building out their battery swap stations. In previous videos, I've been calculating roughly that this may cost them up to $2 billion in total for executing on their plans of building out to more than 4,000 battery swap stations globally. And so looking at this chart where NIO is currently priced, meaning on this metric here for enterprise value in comparison to sales, you can see that NIO has only traded lower on this metric, on this valuation metric, during the time when NIO was actually facing real bankruptcy issues. So that was when NIO was really issuing convertible bond after convertible bond because they literally only had a couple of million US dollars in their bank accounts. Back then, this translated into share price around less than $2 actually, and NIO was priced relatively to their sales at this low valuation, and we come back down to this low valuation in comparison to what NIO is actually doing nowadays in sales. And so one could say NIO is currently priced for a similar bankruptcy situation. However, the situation is entirely different. Meanwhile, NIO has more than $8 billion in cash and cash equivalents currently on their balance sheet, while this may go even lower in the next reports because NIO still is burning cash. This situation is entirely different to what NIO was back then. And while the net losses have been widening quite recently, so NIO is currently burning more or less 400 million per quarter. Let's just do some back of the napkin maths here. So if NIO would keep burning 400 million US dollars per quarter like they're doing right now, in a phase where they're building out lots of battery swap stations, where they're hiring people in China, in Europe and the US, and are investing a record amount in R&D, at this time, NIO is burning those 400 million per quarter, and with $8 billion US in cash, that would last them as a runway for round about 20 quarters. Of course, this is kind of a very lazy calculation here, but that would translate into 5 years more or less where they can just keep on making those losses and be not profitable and not running risk of going insolvent without raising additional money or issuing, for example, new bonds. Now, of course, NIO is in a situation where they're now ramping up new models like the ET5, so they will be increasing their sales and the volumes. And at some point in time, because NIO is now also in a process of ramping the output, they will also aim to get to 25% of vehicle margins, which ultimately should help them to break even once the costs are on a steady level or even going down. And at the same time, those bigger margins kick in and help to pay for all of these expenses. So it is quite likely that with the current cash position, NIO could actually break even, so without having to further raise. Although we have to see, with those expansion plans, 2 billion, let's say, at least for the battery swap stations, they may have to use some of this cash that they're currently having. And this cash cushion is expected to go lower and lower over time. At the same time, even during a recession, and people would argue China currently already is in a recession, NIO is growing from such a tiny level right now that they might be able to still increase their sales over time, even next year and so on. And then when we compare this metric, for example, to Tesla, which let's say in between 2017 and 2018 have been also selling similar amounts of cars than NIO is currently doing. Back then, as you can see here in this chart, they actually have been losing up to 700 million per quarter. And this begs the question, how can this be possible? Isn't Tesla even more efficient with their capital? And in many ways, Tesla is more efficient with their capital, and they have higher margins than NIO has currently, but that wasn't always the case. And there is one very important distinction between Tesla and NIO, which is that Tesla owns their factory, which is great because they get all of those efficiency gains. But at the same time, it's not great because they have to invest all of this money. And so that is making their business model a little bit more resource and cash heavy. They need to invest more money in order to build and to entertain these factories. And also in a downturn, these factories possibly could sit idle if there isn't enough of demand for the cars. Whereas for NIO, they are not owning their factory, they are outsourcing it to JAC. And in case of a real recession, let's say there is no demand for it, they're also not owning the factory, they don't have to spend money for this factory. And if they need more capacity in an economic expansion, they also don't have to invest too much of their own money. Of course, they have to bring in some tools and machinery, but that's significantly lower on capital expenses than, for example, let's say what the model that Tesla is doing. So it's both having advantages and disadvantages, but in general, NIO's model is quite lean actually. The business model is focusing on the key activities and resources that they're doing, namely the R&D, bringing out new models and brand building. So that's what they have the NIO houses for and stuff like that. And that's where they put in lots of money, but they're not putting too much capital expenditure into place for factories and stuff like that. That's where NIO is saving money. Essentially also in the area of battery swap stations, the batteries themselves are not sitting on NIO's balance sheet. They are bought by the battery asset management company. And so once again, this is how NIO is very lean and cost efficient with the money that they're spending. And so ultimately, I think this will help NIO to even get through a downturn, an economic downturn, if that would be the case. But I think there are more demand levels that NIO can actually trigger there. And as I pointed out, there are ways for them to quickly become profitable at some point in time. And I think they have better chances actually even on doing so than, for example, competitors like Xiaopeng, who have tinier average sales prices, tinier margins, and at the same time are investing also in a factory. So much harder for them to break even, not so much for NIO. And so, well, let me know what you think about this in the comments. Are you worried about that? And did you find this explanation helpful? Thank you guys for watching and see you in the next video.